Explosive potential awaits Bitcoin as a spot Bitcoin ETFs project a colossal $220 billion inflow over 3 years, propelling Bitcoin to a potential quadruple surge at $280,000. The outlook has analysts eyeing Coinbase positioned for success with a raise price target of $300. The crypto market's trajectory seems poised for a significant capital allocation, with ETF approval marking just the beginning. Don't forget to subscribe, like, and share, and let's start. So we're starting off with as Bitcoin outshines gold in every way. The first market Bitcoin will swallow is dinosaur gold. That is 10x from here, $74,000 to $750,000, plus 1,000% increase in USD domination. Just in MicroStrategy to raise another $500 million through convertible notes. He is buying more Bitcoin. So will you still buy Bitcoin at 200,000? I'm just curious, as I see many people on Reddit asking if they are too late to buy Bitcoin or if they should wait for a dip. I'm invested, but I will say I do find myself asking myself this as well. Anyway, there will be comments that tell the person yes, they are too late, or that they would absolutely not buy Bitcoin at current prices, currently 73,000. My question to the community is, if when Bitcoin hits this higher valuation, say 200,000, are you still going to be swapping fiat for it? Is there a valuation where you might consider not buying anymore? Also, once Bitcoin flips gold, it will be worth over $740,000, which we already know. Justin Dallin Leclerc on Fox Business, Bitcoin is just a protest against the absolute fiscal bazooka of the current US government. I've dished this Bitcoin chart out to 3 different friends today, and it stops the debate of buying Bitcoin versus other assets real quick. As we could basically see, 1 year ago, from 1 year ago, 238%, 17% for gold, 33% for S&P 500, 2 years, 88%, 10, 21, 3 years, 22, 26%, and there are a lot of other years and percentages, which we could basically see. 14 years ago, plus 2.4 billion %, and gold was at 96%, and S&P 500 was 343% alone. Next up, what do we have here? Gold versus Bitcoin. It took the iShares Bitcoin ETF IBIT 8 weeks to hit $15 billion in assets under management. By comparison, it took the gold ETF GLD 3 years to hit $15 billion in the assets under management per zero hedge. Meanwhile, the 2 largest Bitcoin ETFs IBIT and FBTC held 330,000 Bitcoins as of March 13th, and this is over 5 times that what gold miners added since the inception. So Bitcoin ETF net inflows have now topped $11 billion since its inception. Bitcoin is bigger than ever. Also, historically, when Bitcoin breaks an all-time highs, a monster altcoin run kicks off. Bitcoin broke all-time highs this week. Time for the history to repeat. Let's see how it plays out well. BlackRock is making taking Bitcoin look like a child's play, sucking Bitcoin from every corner of the earth by just dumping futures, carrying weak-handed retail, and then sucking up the Bitcoin through the ETF. So this is not a manipulation, and it's also correct and healthy and moral to take Bitcoin from those who want to give it up. Stop giving your Bitcoin up. Also, it's fun to watch Bitcoin be able to make new all-time highs on almost a daily basis again. Feels like ages ago the last time this was happening. The vibes also feel different, and it still feels like many think this is too good to be true rather than euphoria of last cycle. Justin Adnak Group to organize Bitcoin MENA Conference 2024 in Abu Dhabi, as this brings the world's largest Bitcoin conference to the Middle East and North Africa MENA. Pictured is humanoid Matar al-Haheri, MD and Group CEO of Adnak Group, and David Bailey, CEO of Bitcoin Inc. Also, let's go for more. What do we have here? New JMP Security research note, $220 billion to flow into the Bitcoin ETFs over 3 years, applying current multiplier of next capital 25x. This alone could drive a $5.5 trillion Bitcoin market cap increase, 280,000 per Bitcoin alone. And to this topic we go. So $5.5 trillion claim for Bitcoin from research company. How much will Bitcoin price will be? Spot Bitcoin ETFs could see inflows of $220 billion over the next 3 years, and according to a research report published today by the brokerage firm GMP Securities, meaning the price of Bitcoin could quadruple to 280,000 once the multiplier is applied to the new capital. GMP analyst also stated that a crypto exchange Coinbase is in a good position if entry predictions prove correct, as a brokerage firm maintaining its outperform rating on the market while raising its price target on the stock to $300 from $220 as the highest among the Wall Street analysts according to FactSet data, and at the time of writing, Coinbase shares were trading at $262, up 2.6%. While spot Bitcoin ETF inflows exceeded expectations, reaching $10 billion just 2 months after launch, GMP said the activity and flows experienced to date are probably still the tip of the iceberg, adding that flows will be significant as ETF approval is just the beginning of a longer capital allocation process. He added that it will continue to increase significantly. We estimate an additional $220 billion in flows into the ETFs over the next 3 years, which could have a significant impact on the Bitcoin price given the capital multiple, wrote analysts led by Devin Ryan. If we're directionally correct about the net ETF inflows reaching $220 billion, applying our current new capital multiple estimate of 25x, this alone could result in a 5.5 trillion Bitcoin market cap increase, a price of $280,000 per Bitcoin, as the authors added. The next one we go for, Bitcoin price soars as halving approaches. So Bitcoin price continues to make new highs above the $73,000 approximately 35 days before the halving, with the price at $73,000 at the time of writing. What do market experts expect that after the Bitcoin block reward halving? What's next for cryptocurrencies? So, Bitcoin halving. Every 210,000 blocks, the Bitcoin network cuts miners' rewards in half, initially awarded 50 Bitcoin per block, as the network will give a 3125 Bitcoin reward after the April halving. So unlike previous halvings, we are now in a very different environment, as the cumulative value of cryptocurrencies has quickly climbed from $2 trillion to the $3 trillion threshold, as the demand from the spot Bitcoin ETF channel is massive and there was no such support during the previous halvings. Moreover, ETF approval has transferred Bitcoin into an investable legitimate asset in the US. So, expert predictions. Wait a minute, if there's already such demand in the ETF channel, shouldn't it multiply with the halving? Indeed, this was the case in previous halvings, which were almost entirely driven by individual investors. Ethan Vera, the COO of Luxor Technology Corporation, said, "We expect continued institutional interest in both the underlying commodity and companies operating in its space, like miners." So John Ardini, a senior managing director at Riley Securities, also thinks the halving will increase the risk appetite for institutions wanting to buy Bitcoin. Ardini said there is more evidence that Bitcoin supply won't balloon, which is a clear positive for many potential institutional investors. And Ruben Sahakan, an investment banking director at Stifel Financial, believes that investors investing in Bitcoin for the first time will not be much affected, as he also assumes that the demand for mining stocks might weaken due to those interested in monitoring the impact on miner profitability. So that's kind of all the information we got on today's video. Don't forget to subscribe, like, and share. See you in the next one, and peace.